For our story, we're basically going to be covering two sides of the life insurance debate. We're going to be listening to a little bit of a sales pitch for one side, then we're going to be listening to a story that contradicts it a little bit. Our first video, and I'll link it below, is Rob Gill's Unlocking Wealth.
If you aspire to get up to a higher level, one of the key elements to that is matching and mirroring and modeling. If I want to go from medium net worth up to high net worth, what I'm going to do is I'm going to identify individuals and or businesses that I want to match, mirror, and model. What are they doing differently that I'm not doing?
Nice opening. I really like the idea of learning from experts who have been successful in the things that we care about.
We talk about the velocity of money. In my opinion, if you want to elevate what you're doing, you have to use OPM. You have to use other people's money. In addition to that, you have to get a higher velocity on the dollar that you have. Let's look at the facts. The facts right now is inflation is running still north of 8%. We've had market recovery, certainly because interest rate increases have kind of leveled off a little bit, but interest rates are still on the rise. When we look at keeping our money at the pace or outpacing things like inflation, we have to get a higher velocity on that dollar.
Already, I want you to know that I get a red flag when I hear someone say OPM, other people's money, because the thing that never gets sold when you hear about other people's money is the risk that's involved. But I really like the idea that if we have to preserve our wealth, we need to invest in a way that beats inflation.
That's from a micro distinctional perspective. Let's think from a larger standpoint. There are individuals that historically have utilized strategies such as bank on yourself or leverage to build out what I would classify as conglomerates. And what I'm going to do today is I'm going to give you some examples of individuals who have leveraged cash value life insurance as an asset that they can utilize to build and scale other things. Let me show you some examples. Case in point number one.
Okay, he brought up leverage. That brings up another red flag for me.
The Rothschild family. We're talking the 18th century. All you haters out there that are thinking that whole life insurance is a scam, etc., you're talking about a product that is dating back to the 18th century.
Okay, here's a big red flag for me. If someone says all the haters out there are telling you that my thing is a scam, there's a reason for it. And just by saying the thing you're selling is old does not address the concerns as to why someone may or may not think it's a scam.
Unless your last name starts with Rothschild, then you probably need to pay attention to what I'm about to say, because in the 18th century, this family was leveraging whole life insurance policies to finance the British Army during the Napoleonic War. Now, here's a name that is synonymous with everybody from Fifth Avenuers to oil tycoons, etc. We're talking about John D. Rockefeller. Monopolized the United States oil industry by borrowing against the cash value of his insurance policies. In fact, there's a great book out there that highlights what specifically he did, written by somebody that we know. It's What Would the Rockefellers Do? Talks about family trust planning, family foundational planning, and the uses of a product that you are probably hearing more often than not is a scam.
There it is again. He says you're more often than not, more likely than not, going to hear that whole life insurance is a scam, but we still don't know why.
What you really do need to do, ladies and gentlemen, is you need to understand what whole life insurance can and cannot do. You understand how to construct it with the end in mind, and understand that if you utilize it properly, it really can create a fantastic velocity on your dollar. It can lay the groundwork for you building out that vision of what you see.
I think that's a great spot to stop. That's great wisdom to only invest in something, only invest in a plan that you fully understand with the end in mind. Understand how the strategy you're implementing is helping you get to the end that is your goal. Now, I don't know if I can fault the video for this or not, but it never talked about the purpose of life insurance in general, regardless of the type of life insurance you have. For me personally, my wife is the beneficiary on my life insurance policy, and I'm the beneficiary of hers. If either one of us die, we get a payout if it's during the time that that policy is active. Again, regardless of what type of policy it is. The reason being is if I were to die now, or Amanda were to die now, we would be facing an income crisis. When you hear life insurance, I want you to think more income insurance. The death benefit, the lump sum that the beneficiary gets paid out of a life insurance policy is intended to help the beneficiary replace the income that is being lost as a result of someone passing away. And if you're hearing this as a stay-at-home parent, I want you to realize that the earned income from the breadwinner should also be applicable to you, because if they want to stay with the kids, if that's the plan you want to enact, well, they need to replace their income in order to become the stay-at-home parent. In short, it's wise to defer the risk of someone passing away unexpectedly to an insurance company through life insurance. That way, those who are dependent upon that individual's income are not going to be financially suffering. They're simply going to be mourning the loss of their loved one. And nowhere in that particular video was that brought up. It was all about wealth building. I want you to keep that in mind. Okay, next we're going to listen to a story from Joshua Talks Money. This is Joshua's video entitled Warning, My Whole Life Insurance Story.
All right, so this is my experience with whole life insurance and how I basically took $20,000 and lit it on fire. So yeah, this is a painful story to share, but I think it's really important to talk through my decision making, how I got into this life insurance policy, and why I chose to cancel it. All right, so how did I even get into this policy? Well, I had just sold my technology company and I just became a dad. It's kind of two huge milestones in life that happened around the same time. I got connected to a financial advisor. We start going down this life insurance path. Now, this life insurance was sold to me as this, too good to be true insurance/investment product.
At this point, I'm going to reiterate again, we have the purpose of insurance brought up, but not explicitly explained, and it's coming from someone who's helping Joshua build wealth.
That wealthy individuals use. The advisor says he uses it himself, a big advocate for it, and it has all these benefits from accumulation of cash value, dividends. You can basically pull out some money from the policy, use it as a low interest loan, not have to use a bank, some tax benefits. And so yeah, at the time it sounded like, wow, maybe I should do that. So I end up purchasing a $1.5 million life insurance policy with an annual premium of over $10,000.
Just let those numbers soak in for a moment.
$10,000. That's about $850 a month that I'm throwing into this insurance policy. Now, I broke some golden rules of personal finance. I didn't fully understand what I was investing in.
That's a huge golden rule right there. Don't ever put money into something you don't understand. Please.
Second, I didn't shop around with financial advisors. There's a saying that don't hire the first advisor you meet. That's exactly what I did.
I'm going to say that I may or may not be guilty of that too in some instances. It's really hard to say no to a salesman that's really compelling.
I also wasn't certain, this is the third one, I also wasn't certain of the way that advisor makes money. I should have explicitly said, hey, are you going to get a big commission from this? How do you get paid from this? And that's fine. I've worked in sales for 7 years. Commissions are not the problem. Making money is definitely not the problem. But I needed to understand how that process works so I could be a better informed investor and client.
I think that definitely falls in understanding your plan, because if you don't know how somebody is making money, you don't know what's motivating them to provide the value that they are. This is largely why I have avoided getting a financial certification for myself. I don't want something, a product that I sell, to influence the information that I give you. I simply want to avoid that bias.
You have to feel comfortable with what you're investing in. You have to feel comfortable with who you're doing business with. And I remember after I purchased the policy, and especially after I started making those premium payments, I didn't feel comfortable. And a key takeaway and a red flag is, if I can't explain this policy to my family or my wife with complete confidence and certainty of all the nuances and all the value and all the reasons why we're paying for it, there's probably something wrong with that situation.
That reminds me of one of my favorite Einstein quotes from school. If you cannot explain it simply, you don't understand it well enough.
And that's exactly how I felt. So I want to stop here and just say, hey, I didn't get scammed. I didn't get taken advantage of. I believe fundamentally that everyone has the responsibility for their own actions and their own lives. And you have to do the research and you have to understand the things that you're getting yourselves into. Okay, so what did I do next? I went and got second opinions. And I found two critical pieces of feedback. Hey Josh, that's an okay policy, but I can get you a better policy. And really what was happening was I was being sold another complicated insurance product by some other advisor. The other camp was the people that do not believe in whole life insurance. And they would say, yeah, that's garbage. We don't even sell that. You should not be in it. There's other things out there where your money can make far more money. And we would never recommend the policy you're in.
Let's take a moment to reflect on that. He's got two parties talking to him. One side is trying to sell him something that he perceives as complicated, difficult to understand, which means it may not be right for him even if there is a benefit. And the other side is saying, we're not going to deal with that, either because they don't understand it themselves or they truly believe that it's a garbage product.
I heard that both of those from several professionals. This is what I have concluded. Much like CrossFit, or maybe people that are super into herbal and natural medicine and take supplements, they're all in. They truly fundamentally believe in that. And so I believe life insurance salespeople, I think they really believe in the product. You have to, unless you're an evil, horrible person, you have to believe that you're helping people.
That's a really good point. Someone who genuinely believes in what they're selling is going to do a very good job selling it, even if it's not something that's right for you.
So I'm not trashing life insurance and life insurance salespeople. However, they're not for everybody. And I don't believe it was for me. And so that led me to decide that I should probably cancel. Now here's where things get weird. I call Mr. Financial Advisor. I explain that I'm ready to cancel. And on multiple occasions, I was met with some anger, some guilt trips, some animosity, some scare tactics. And that immediately validated that this was totally the right choice for me. I'm sure this person had strong feelings, but I can't imagine them getting angry because they care about my finances that much.
Why do you think that financial advisor got so fired up and started implementing guilt trips and scare tactics?
So, no. That's when I said, okay, we're done with this. The big problem is my policy was structured to where I'm paying, $10,000+ a year pretty much forever. But those first couple years, that money paid in has no cash value. And what I mean by that is all the fees and underwriting and commissions, those were all packed into those first couple premiums. And if I cancel, I lose it all. So I was weighing, that risk of, do I walk away? Was this a complete waste of everyone's time? And yes, it was. And that's what I did. So I logged in, went through the process, and with one button press, 20 grand was completely gone.
That's crazy. I think this is a great example right here of why it's important to understand what you're getting into before you buy it, because he probably didn't think through, if I cancel this, what's going to happen? And his policy was very heavily front-loaded with the fees that went into the product. And this man had to exercise incredible willpower in order to overcome the sunk cost fallacy.
And that's tough. So what am I going to do instead? Well, I've kept the term insurance. We're going to keep that going. That's obviously good to hedge against risk. And second, all that capital I've freed up, 10 grand a year, I'm going to focus on investing in US equities. I have just purchased some real estate. I'll do a video about that. And there's just other areas that I'd rather put that money to work that I know have, one, better math, better likelihood of returns, even with taxes, by the way. And most importantly, something I feel good about. Look, whole life insurance may be something you love, that has changed your life, that you're a huge advocate of, and that's totally fine. For the vast majority of people, I don't think that's the case.
Okay, two final takeaways from Joshua's story. One, what did he end up doing at the end of all of this? Well, he kept term insurance in place in order to defer risk, the purpose of the life insurance that we talked about earlier. And he leaves this video with the sentiment that he believes that there are some people who are very passionate about whole life insurance who may very well benefit from it. However, his final feeling is that it's probably not a product for the vast majority of us.